Hello, everyone. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. First of all, I hope you're all doing very well and ready to dive into today's market insights. Apologies for the late start this morning. Technical hiccups are getting the best out of me here, but thank goodness that we are back on track now. Things are all sorted. We've been trying to battle this whole the last 30 to 40 minutes now, just to ensure that we take on this Forex Morning Mastery today, as it's a very, very important one, considering the fact that we are about to begin the second half of the new week which we of course need to really have a deep insight into the structural patterns on the chart, so that we can prepare ourselves adequately for the potential high volatility move that is likely going to be happening during the second half. And secondly, my camera is not on. I also have technical issue with my camera at the moment, still trying to battle and sort things out. But I have a couple of people behind the scenes trying to work things out. I hope that will be sorted out before the end of the session. But if it doesn't, it's okay. I'm glad that we are live. And thank you very much for your patience. And let's get into it and make the most out of this time together. So for this session, I will try as much as possible to make it as short as possible, due to us starting very late and of course the limited time we do have here. So please bear with me. But if you have any questions whatsoever, feel free to let me know in the comment section. For those of you who are joining us for the first time, you're highly welcome on board. I'm very glad to have you around with me this morning. The Forex Morning Mastery is a platform where we all come together to monitor the behavioral patterns of market participants through the lens of price action and fundamental analysis. And of course, we do this 3 times in a week, that is Mondays, Wednesdays, and Thursdays, where we all come together to do a follow-up detail on the assets we have been monitoring since the beginning of the week, and of course use the historical data we identify to strategically position ourselves for the next move. Very excited to have you join me, and I encourage you all to engage in the comment section below. If you have any questions, feel free to drop them right in the comment section. So with that being said, here we will be diving right into the business, and as always, the first thing we normally do every day is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, by checking on the economic calendar, we tend to identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and better timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the asset we are monitoring this week, we have been focusing on high impactful event from both the United States and the United Kingdom economic docket. But for this week, the first half of the week is absent of any top tier economic feature. So what we did was to include the mid-tier economic feature so that we can have a broader view into what market participants might want to take succor in before making any decision during the first half of the week. Now, doing this, on Monday, August 26th, we had the durable goods order. A data that gives us an insight into how well the manufacturing sector is in the United States, and of course it is measured by the cost of orders received by manufacturers for durable goods orders, which means goods that last for about 3 years or more, such as motor vehicles, electronic appliances, and of course aircraft as well. And of course, the data here gives us an insight into the health of the manufacturing sector of the United States, where if the data comes in higher than market had expected, could signal a buoyancy in the US economy, which in the long run will result in a positive traction in favor of the US dollar. And of course, we were looking at, when we looked at the data from the previous month, it came in at deficit of 6.9%, and economists and market participants were projecting a 4% expansion for this month, which was quite a positive signal in anticipation of that event. However, when the event came in, we had a whooping 9.9% expansion in that regard for the month-on-month. And of course, excluding defense, we had a 10.4%, which shows us that the manufacturing sector is doing pretty well for the month of July. And of course, the last 24, 36, 48 hours in the market, we've seen some considerable recovery in the US dollar, showing us, as this data here gave us a signal that the high concerns as regards to the US economy isn't that really that high. Now, on Tuesday, August 27, we looked at the housing price index, which is not really an impactful event, but it just gives us an insight into the health of the housing sector. And of course, we do know how sensitive the housing sector is to the United States. The data came in at a deficit of 0.1%, way below the previous month data, and of course below what market had expected. So from the United States so far this week, we've had mixed economic features, mixed economic data coming out from that economy. So we are going to be going into the chart to see how market participants have digested this information. However, it's also important to acknowledge the fact that we're still looking forward to some high impactful event later in the week, that is on Thursday and Friday. We are looking at the gross domestic product annualized for Q2, which will be giving us an insight into how well the US economy had done in the last we're looking at an inflationary gauge data, which is the core personal consumption expenditure price index, coming in on Friday. And of course, the anticipation of this high impactful event during the second half of the week is likely going to be influencing how market participants will be preparing for them. And of course, the structural patterns we see on the chart will give us a clue of where price action is likely going to be heading to. However, besides this, we are looking forward to some important speeches today. One is from the United Kingdom. We are looking at Catherine Mann. Catherine Mann is the Bank of England Monetary Policy Committee member, and whatever she shares today, she's going to be giving us an insight into the UK economic outlook and of course potential interest rate decisions. And the same thing also with the United States, where we will be looking forward to Federal Reserve Bank of Atlanta President Raphael Bostic, who is going to be speaking in about 12 to 13 hours from now. So I encourage us all to mark out this event on our calendar, as we will definitely be looking forward to them to have an insight into what's their economy, their respective economy is looking like ahead of this macroeconomic event coming up tomorrow. So with that being said, here we will be diving right into the charts, and let's look at things from a technical standpoint. Now, the first asset we will be looking at today, as always, is going to be the USOILSPOT. And of course, on the USOILSPOT, we've had a phenomenally good week. We are running with over 500 pips in profit from all positions. What's happening here? Okay, so we are running with over 500 pips from all positions. Remember, at the beginning of the week, we were buying the USOILSPOT right at the break of that range bound structure, had the $75.48 level, rode it into the $77.50 area where it hit our TP target. And let's look at that quickly and digest what has gone so far this week. So remember, at the beginning of the week we had this range bound structure where price was confined within the $75.48 and the $74.80 area. And of course, you know how we treat our range bound structure. Whenever we identify them, we wait patiently for price to give us a signal, either in the form of either a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And if you remember vividly, I did mention this at the beginning of the week, that for those of us who missed out on the breakout of this resistance line, should wait patiently for price action to come back, retest the structure to continue the uptrend move. And if that doesn't happen, I did mention here that we will position ourselves above the $75.81 area to join the uptrend continuation. And if you had done that, we had a minimum of 2 buy position triggered as at the beginning of the week. First one run into a 200 pips profit as price hit TP target, and of course the second one ran into a 170 pips. So as at the first trading day of the week, we were running with a whooping 370 pips in profit. However, after price tested the $77.50 area, I did acknowledge in my update yesterday on my Telegram platform that price action had gone into a consolidation phase, emphasizing the indecision that was going on in this particular market. And I did attribute the indecisive nature of price action to the latest development as regards to the tension in the Middle East, where we saw signs of easing in that tension, and the market wasn't really sure of what is likely going to happen. So as a result of this, it went into a range bound structure confined within the $77.50 level and of course the $77 area. And in my commentary, I did mention that we will be relying on this ascending trend line to guide our trading decisions for yesterday's trading session. And of course, you know how we treat our ascending trend lines. As long as price remains above that structure, we will look out for patterns and structures that support the idea of buying. But if the ascending trend line is broken to the downside, then we want to prepare for selling opportunities. And of course, I placed my arrow down here that we look out for a breakdown. If you missed out on that one, the market came back to retest structure, and look at what happened. We saw price action drop significantly to the downside, and at this point in time you should be having a minimum of 200 pips in position at the $74.80 level, which is currently running at break even. And I do hope that this momentum will continue to the downside. However, for those of us who are in this position right now, it is appropriate that we move all our stop losses. Let's secure this current sell position, as anything could happen at this point in time. Remember, we are at a critical structure where price started the bullish momentum at the beginning of the week, and it could turn out to be another platform for buying opportunities. So anywhere around the $75.25 level seems most appropriate to move all stop losses to on this current sell positions we are having right now. So with a well secured position at this juncture, what is going to be our plans as we prepare for today's trading session? Well, before we go into the technical details of what we are going to be looking out for, it is important that we also understand what is going on behind the scenes. What are the major drivers influencing the sentiment in this particular market? And as you will see, in the last 24 hours, the market has dropped significantly, and this could primarily be driven by concerns over slower economic growth in both the United States and the Chinese economy. Now, these concerns weigh heavily on the oil market, as both countries are major consumers of oil. And for those of you who were part of our Monday's Forex Morning Mastery session, you remember I did acknowledge that data coming in from China hasn't been pretty good in the last couple of weeks, which is a major concern for buyers of the crude oil market. So as a result of this could be one of the major reasons why price has dropped significantly in the last 24 hours. Then secondly, we're talking about the US crude oil inventory. The API report yesterday, that is the American Petroleum Institute, reported a significant decline in the US crude oil stockpile, with inventories falling by 3.4 million barrels for the previous week. Now, this drop is in contrast with the previous week's small increase and surpasses market expectation, which had predicted a 3 million barrel decline. So for me, this inventory drawdown will provide some support for oil prices, and in fact, because of this, we will be looking out for support areas on the chart where we can actually position ourselves for buying opportunity if that is going to be happening today. And to further support the uptrend scenario on the US oil spot is the geopolitical tensions and of course Libya's oil production. I mentioned this on Monday, where we had concerns over Libya shutting down their oil production due to political reasons and the like from that particular area, and of course the potential shutdown of Libya's oil production and ongoing geopolitical tension in the Middle East are limiting the downside for crude oil prices. Remember, Libya produces over a 1.2 million barrels per day, and this shutting down of refineries there could trigger supply concerns, as more than 1 million barrel is exported to the global market from that particular area. And if this is withdrawn from the global market, you know how that is going to rub off on the demand for this commodity. So as a result of this, we have mixed features here, mixed contrasting views around this area, where we have factors supporting an exerting pressure on the US oil spot, and of course we have factors here that also support a potential uptrend scenario. Now, in this case scenario, how do we use or correlate this information we have gathered here to what we are seeing on the chart? Well, the first thing I will acknowledge here is that support line at the $74.80 area, which was where price action started the bullish momentum at the beginning of the week. Now, this area, going with the fact that it has a memory for buying power, this area was a buying niche at the beginning of the week. Remember, we saw this engulfing bullish candle started around this area, resulting into that profitable trade we took on Monday, and right now price action is back into that particular area. Now, if we look at the character of price action ever since price action came into the structure, you begin to notice the signs that buyers are still present in this market. Now, look at the nature of this candle right here. It's looking like a hammer candle, with theoretically emphasize that buyers are still present in this market. Now, the second candle is still running, and it has about 17 to 18 minutes left for it to close. And if this candle as well closes in the form of a hammer candle, let me say, or any form of signal that shows that buyers are present, it could be another avenue for us to continue an uptrend move. Now, in addition to that one thing that we're also going to look at here, if we take into account what has been going on in the last couple of weeks, you can see we have an ascending trend line here after connecting the series of high and lows. But one thing about the trend line here is the fact that price action has broken down this trend line at this point in time. Now, this could be a red flag for cautious traders like me, and in fact, before I would like to join a buying opportunity below an ascending trend line, I would want to see significant confirmations that tells me that sellers are finding it difficult to maintain momentum below the $74.88 area. Now, for us to see things clearly around the $74.80 level, I would like to scale down into the 15 minutes time frame. Let's see if we have a structure that can confirm to us that buyers will be taking over the market today. Now, scaling down into the 15 minutes time frame, this is what you will see here. We had an impulsive bearish leg bringing price into the $74.50 level, and then we saw buy pressure resume around that area. Now it appears that the second attempt by sellers to break through the previous low is being stalled around the $74.60 area, as if this persists and sellers found it difficult to break down the previous low, we may have a reversal setup on the table to guide our decisions today, and this may look like a double bottom structure. And whenever we identify a double bottom structure, the next thing we do is to mark out the neckline of that structure, where the breakout retest of that neckline will be all we need to validate the potency of that reversal pattern. Now look at what we have here. The neckline here seems to fall at a psychological level at the $75 area. Now I would like to see price breakout retest the $75 area, which is serving as the neckline of the structure, to continue the uptrend move. So to give a visual representation, we're looking out for something like this: breakout retest of structure of the $75 area, then we join an uptrend move, and of course ensure that we have our stop losses way below the previous low here, which dovetails to about 45 to 50 pips depending on where your entry point is. Now, for those of us who are already profitable on this asset, remember we are currently running with over 500 pips in profit since the beginning of this week. So if you are someone like me who is already in profit in this case, well, I will just place a buy stop order above the $75 area. I still can afford to leverage on some of the profit I'd made so far this week to test waters around that area if it's going to really work. So placing a buy stop order is making a lot of sense for those who are profitable so far, and let's see how far it will go. And if it doesn't go very well, it takes us out in a loss. That means we are only losing some of the profit we have made so far this week. However, if you're new with us and you're yet to have a leverage, I would encourage you to exercise patience and wait for price action to break out of structure, retest, giving us signs that sellers are finding it difficult to maintain below the $75 area, after which we can join that uptrend move. So this is how we are going to be managing our bullish buyers on the USOILSPOT today. Now, in as much as things are looking bullish around this area, we cannot ignore the potential the sellers could also come into play. Now, as a result of this, price continue to stay below the $74.80 area will continue to open up ideas for selling opportunities. And for those of us who had missed out on this current sell position we have, I would suggest that you wait for the breakdown of the $74.50 level for new opportunities to join that decline, as this will have broken down the lowest point price action has been for this week. So to sell here, for those on the sell, looking out for more selling opportunities, have the breakdown retest of the $74.50 level, because by the time price breaks down the $74.50 level, the structure we saw that was forming, evolving on the 15 minutes time frame would have been negated. So let's see how the market is going to play out today, and as everyone anticipates the speeches from the Fed Reserve officials, let's see how this is going to impact the sentiment around this market going forward. So if there are any new developments that is different entirely from what I talked about here this morning, I will definitely give us an update on my Telegram platform. So this is my simple view on the USOILSPOT today. We have a sell position running at this point in time. I did mention that we move all stop losses, secure this current sell position while we continue to monitor price action on the 15 minutes time frame, and let's see if that reversal setup we saw there will be validated at the breakout of the $75 area. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right, in the absence of no questions, I will take that as a confirmation that we are all on the same page. I do hope you've marked out the structures accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. And do not forget to give that video a thumbs up. Your likes are valuable to me, and of course it also helps the algorithm promote the video to a wider audience of traders too. So with that said, let's move right into the next asset on our watch list. So the next asset on the table is the GBPUSD, that is the British pounds against the US dollar. And in fact, I did give an update on this asset this morning, and for those of you who are following me on both my TradingView and Telegram platform, you must have been updated about this current structure. And as at the beginning of the week, we saw how the market was consolidating. In fact, for a very long time, it lasted about 36 to 48 hours. The market consolidated within this range bound structure. And of course, if you remember vividly, I did mention that if we are going to be selling on Monday, we want to see some significant confirmation that sellers are gaining momentum, like a breakdown, retest of structure on my lower time frame to join the bearish move. And of course, I had a sell position triggered after seeing this whole scenario on Monday, but unfortunately that sell position did not do very well. But later on Tuesday morning, I begin to notice that sellers are finding it difficult to break through this area. So I did label this area as a demand zone for us prior to yesterday's trading session. And of course, buying around this area was making a lot of sense. We joined here, we bought again at the 1.3225 and another one at the 1.3230 area. Price indeed moved into the 1.32635 area before this bearish momentum came in, and I do hope you moved your stop losses accordingly, as I usually mention here that whenever price moves significantly in your favor, move your stop losses accordingly. If you have done so, you must have been taken out of that trade with a reasonable amount of profit. Now, as of this morning, while I was looking at the structure, I noticed that the pound sterling had retreated significantly ever since testing that 1.3266 area, which is the highest level in more than 2 years against the US dollar. And of course, I want to consider that this retracement move could be as a result of short-term profit-taking activities, as investors are now shifting their focus to the upcoming US core personal consumption expenditure price index, and of course the GDP data coming up tomorrow, before making any aggressive bets at this point in time. And this is expected to be a key influence on the GBP USD pair. So we may likely see a retracement move to the downside. However, we do not know how far this retracement phase will go. So as at this morning, I updated us on my TradingView and Telegram platform that we have a new demand zone between the 1.32300 area and the 1.32150 zone, where I will be looking out for buying opportunity. And in a matter of fact, I did had a buy position triggered, but it is not doing very well at all, as price action right now, as the position is currently running in a loss of about 15 pips at this point in time, with my stop loss way below here, the 1.32029. I just hope that we find that bullish momentum again, and if we don't, it's all well and good. We live to trade another day. That is why it is very important that we have a well-defined risk management strategy in place whenever we take in a position. No trade is a fact that it will hit TP target. It's an educated risk, so ensure you always risk something that your emotions can manage. So if you risk maybe a 1%, 0.5% or 2% of your account side, it could still be reasonable. But if your risk appetite is high, if you can do 5%, no problem, as long as you are not clouded by that loss whenever it happens, you are well and good. Now, with the way things are going right now, and looking at the character of price action around the 1.32300 area, look at the nature of these candles here. You can see we have a couple of shooting star candle around this area, which theoretically says that sellers are really present in this particular area, and there is a tendency for price action to drop further to the downside. And if we take into consideration the fundamental factors behind the scenes, everything is in favor of the British pounds. Though the US dollar had a recent recovery, the dollar saw some buying interest after hitting a year-to-date low, and despite this recovery, the overall near-term outlook for the US dollar remains weak due to widespread expectation that the Federal Reserve will cut interest rates next month. In fact, the debate among traders is now centered on whether the Fed will opt for a 25 or 50 basis point rate cut next month. Now, due to this development, the path of least resistance for the British pound is still looking to the upside. Now, from the other side of the pond, that is the Bank of England's monetary policy stance, the pound sterling still remains within a mixed performance against its major peers, of course, and the recently cut rate by 25 basis points last month could have favored the economy positively, as we saw some positive traction from the United Kingdom last week. The retail sales data came in higher than market had expected. The GDP data came in higher than market had expected as well. And I think we had another macroeconomic data which also came in. I can't remember what that one is. I think it's a labor-oriented data, I guess. And that one also came in higher than market had expected, giving us signs of a resilient UK economy. So I still think the path of least resistance remains bullish for the British pound. But the question now is, what path is it going to take? Is it going to retrace a little further to the downside before the uptrend continuation happen, or will the uptrend continuation start from this particular area? Now, if it drops further to the downside, we have a structure to play around with. Look at this descending trend line right here, which captured the series of lower highs since last week Friday. So if I extend that trend line a little further to the downside, we may see a situation where price could drop into that structure before it builds up momentum for the second leg of the bullish move that started last week. And if we look at the distance between this area here and that trend line, we are looking at about a 57 to 60 pips TP target. If you are doing a counter trend opportunity on this one, or you are a scalper who is willing to scalp that move, well, you can capture a breakdown retest of the 1.3 to 150 to join that decline. But for me, I would just stay put and wait for price to come into a critical structure where I will be looking out for reversal setups around this area to continue the uptrend move. But if price drops below the trend line, then I want to take this as a good bearish signal where the breakdown retest of that trend line will be all I need to continue the downtrend move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us all updates. Now, another thing I would like to acknowledge here is the trend that started last week in this market. So if I zoom out, let's see if we can find a trend line to work with after connecting the series of higher lows. So if we capture it from this point and run it through, we should be having something like this. Okay, so we have the first one. We're going to be having a couple of trend lines here. Then we have the second one right here. So we have two trend lines, and price still remains above the trend lines, and this for me still confirms that the uptrend is still very much intact. So, and look at how beautifully it lines up with this descending trend line I talked about earlier. So I still, if this demand zone here, let me highlight it so we can see. So if this demand zone here does not work, then we are looking at price dropping into maybe the second ascending trend line, which beautifully shares a confluence with that descending trend line to continue the uptrend move. So I still maintain a bullish bias on the GBPUSD based on this technical structure we see on the chart, and of course the fundamental factors behind the scenes. So this is my simple view on the GBPUSD for today's trading session. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list today. And do not forget to give that video a thumbs up. Your likes are valuable to me. It serves as a source of inspiration for me to continue to do more of this, and that you really find this material useful in making your independent trading decision. And besides this, it also serves as a way of you supporting this community to grow, as the YouTube algorithm will see this video. The more likes we have, push this video to a wider audience of traders who may find this content beneficial to them too. So let's see what happens in the next 5-10 seconds. If you have questions, feel free to let me know. Hello Saeed, good morning. I'm doing very well, thank you, and trust you're doing too well too. All right, so in the absence of no questions, I want to assume we are all on the same page, so let's move right into the final asset on our watch list today. So the final asset on our watch list for today is the XAUUSD, my favorite asset, popularly known as the gold spot. And so far this week we have done fairly well on this particular asset. Not as good as we've been doing in the past week due to the recent consolidation phase going on in this particular market. And of course, the last 24 hours has seen gold prices are under immense downward pressure due to a modest rebound in the US dollar in recent times. However, I still think that the escalating geopolitical tensions in the Middle East are still providing a counterbalance as investors seek safe haven asset like gold during this kind of era. Now, besides this, we've talked about the Fed's interest rate decisions, where everyone is already thinking that there will be a reduced interest rate next month, especially after listening to the dovish comment from the Fed chairman Jeremy Powell during his recent comment at the Jackson Hole Symposium last week Friday. Now for me, I still think the path of least resistance for gold is still looking very bullish, but market participants may want to step aside waiting for these macroeconomic events from the United States, including the gross domestic product annualized for Q2, the core PCE, which are set to be released later in the week, and this data points could influence the US dollar and by extension gold prices, depending on whether they meet or exceed market expectation. And this could be one of the reasons why the market is still consolidating, as major key players are waiting for this event to happen before making any aggressive bets at this point in time. So with that in mind, let's run through what really happened at the beginning of the week and what has been guiding our trading since the beginning of this week. Now, at the beginning of the week, we had a range bound structure. Remember, we saw price action confined within the 2,517 and the 2,509, where we had a consolidation phase. And of course, whenever we see this kind of setup on our chart, we usually exercise patience, waiting for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And of course, we saw price breakout of structure. We had a 100 pips move at the beginning of the week, but it didn't last long. We had another breakout of structure again. Price took us out of that second position in a loss, and in the last 24-36 hours you will see that price has been consolidating within a range bound. And one thing I can tell from this whole structure at first glance is that robust demand zone between the $2,503 and the $2,509 area. And one thing you would notice here is how sellers have found it difficult to break through this particular structure. As every point in time price comes in, we see our buyers come back to take over the market, and this for me is a sign that buyers are finding it cheap enough to join the momentum to the upside from that area between the 2,503 and the $2,509 area. Now the question is, when will that momentum start? And always advisable that we are in the market before the momentum starts, so that we can be part of the trip of the move when it finally happens. Now, in addition to the fact that price action is within or above a demand zone, we have another structure here, which is the descending trend line, which supported the bearish momentum since the beginning of this week. Now, we saw price break out of that descending trend line during yesterday's New York session. In fact, I had a couple of losses around this area yesterday, scalping the market during the go challenge. And of course, we saw price break out of structure, and theoretically we do expect at some point in time price will come back, retest the structure in an attempt to continue the uptrend move. And in fact, the last 5 to 6 hours I've seen the market continue to consolidate around that retest of structure, where I'm still holding that strong belief that price action will continue to the upside from this particular area. So currently I have a buy position triggered for both my scalping and swing trading accounts, and let's see how far this momentum is going to go at this point in time. For those of you who are going to be part of the go challenge today, you are going to be watching me navigate the this market through the lens of scalping it around this area. And if price continues to climb and find new highs, we are having a buy stop order above the 2,517, and of course another one at the breakout of the 2,532 area to maximize the potential of this bullish move. So I will be giving us updates as at when due, as we continue to monitor price action here and on my Telegram and TradingView platform. So this is my simple view on the XAUUSD for today. I do hope I made myself clear. And besides that, after talking about the bullish potential here, we cannot ignore the potentials that sellers can also come into play. And in fact, for me to sell the XAUUSD, I would rather want to see price take out this demand zone first of all, that is drop below the demand zone, retest of structure confirming that sellers are building up momentum before joining that bearish move. And in fact, a breakdown of the key level at the 2495 will be a significant confirmation to emphasize selling pressure in this particular market. So this is my simple view on the XAUUSD. If you have any questions, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to close today's Forex Morning Mastery session. All right, so I see a couple of comments here. Hello, Jonah Haruna. Good morning to you. Glad to have you here. Jonah Haruna says, "Is the go-go challenge still?" Of course, yes, it's still on. It's going on for about 3 months, and we are 2 months in already, and it's still on, of course. Sahid says, please explain the last 1 hour candle which has broken out of the 2509. Is it a fake breakout or a genuine breakout? Okay, you're talking about this one right here, right? It being a fake breakout or true breakout at this juncture doesn't really matter. What matters most is the fact that price is within a demand zone, and in fact, price sitting inside a demand zone, you know what it is. You do not want to be considering selling within this kind of area. As you will see, the memory here says that this is a buying niche for participants in the market. Every time sellers come in, we see how buyers take over the market, pushing price to the upside. And in fact, if you look at this strong bearish move that started during the Asian session, we saw that during the UK session, as soon as price got here, we saw buy pressure resume from that particular area. So for me, I will be placing a buy anywhere around this area. It could be the 2503, 2504, 2505, 2506, 2507, 2508. As long as price is within this demand zone, you want to be looking out for patterns and structures that will support the idea of buying this asset. So looking at the breakout or is it a breakout, is it a true breakout or a false breakout, doesn't really matter in this kind of situation. The most important thing is that price is within a demand zone, and when price is within a demand zone, all you want to be thinking of is how to buy and join the sentiment in the market from that area. Now, if price breaks down the demand zone, takes out the demand, then we can start considering selling and looking out for structures that will support selling ideas on that one. So I do hope I made myself clear, Sahid. And Said went on to say, Telegram CEO has been arrested, so Telegram may be closed. So what will be our next point of contact with you? I don't think that will happen yet. It doesn't work that way. Telegram cannot be closed like that. You remember, we have investors who have stocks in this company, and it can't just be closed like that. Even if it does going to be closed, there will be a process through which it will be done. So there will be a process, there will be notifications and the likes, and during that time we'll get to understand the implication of what is happening and probably choose another platform that will serve us better. But till then, we're still using the Telegram, and let's hope that this does not happen. All right. Okay. So Torres Master says, I've tried to join the Go challenge, but I have not managed. Oh, I'm very sorry about it. I think we talked about this the last time you mentioned this. Did you contact the YouTube support team? Did you send a mail to the YouTube support team, and what did they say? And it's beyond me. I don't know what to do about that. All right. So in the absence of no further questions, I guess we have come to the end of today's Forex Morning Mastery. Or you're welcome. Love you too, Sahid. It's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys, though we started very late, but I'm very glad that we were able to come up with this session today, even though the camera is not working. But I'm very glad that we were able to take on this session today. So I hope you all had a wonderful moment together, and I hope you were able to mark out the levels we identified on the chart. Remember, we are going to be using them to navigate this current market dynamics today, and if you have done so, well done. Just exercise patience and let's allow the structures to mature. And what else again? We were able to take on the USOILSPOT, we took on the GBPUSD, and of course the XAUUSD. And for those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help you in developing your own personal trading strategies on this trade. So I look forward to seeing more of you same time on Friday, last trading day of the week and of the month, where we shall be looking forward to capture the big moves that will be happening as market participants round off their trading activities ahead of the weekend and of course ahead of the new month. So till then, I want to wish us all the best of luck, and for the Go challengers, I will be seeing you in about 20 minutes from now. Let me get my breakfast done and I will be back with you in the next 20 minutes. So I wish you all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.